President. Mr. President, the American people understand this bill. They understand that this bill will hurt middle-income families, and they know this bill will add to the deficit. They understand the Joint Committee on Tax has scored the bill as adding to the deficit, and I hear so many of my Republican friends talk about being deficit hawks. We follow the recommendations of our professionals. This bill will add to the deficit. That is why the American people believe this tax bill, which has been advertised by the Republicans as a tax cut, is not good for America. That's an extraordinary thing to get the majority of Americans against a bill that is purported to be a tax cut. And that's because they understand it's not a tax cut for middle-income families. Let me just give you one number. The corporate tax rate under this bill will be reduced from 35% to 21%. That's a substantial reduction in the corporate tax rate. Now understand, only about 5% of the largest businesses in America pay the corporate tax rate. This isn't a rate paid by small businesses. This is paid by mega corporations. They're getting a tax cut, and you look at the cost of that tax cut as scored by the Joint Committee on Tax, the professionals, and it's about $1.5 trillion of business tax relief. And guess who pays that $1.5 trillion? It goes on our national debt, and middle-income taxpayers are going to be asked to foot the bill. They get that. They understand that this doesn't help middle-income families. You're not helping middle-income families when you raise the estate tax limits so fewer families pay the estate tax. It already affects only the 0.2% wealthiest in America. They're getting a break. Already we have a concentration of wealth in America. The top 1% own close to 40% of the wealth of America. They understand that doesn't help middle-income families because they understand that we've seen in America the shrinking of the middle class, that we've had an increase in income and wealth disparity in America. That's not good for our economy. That's not how you grow an economy. You grow a middle class. This bill will not grow a middle class. This bill will make it even more extreme, the income and wealth disparities in this country. And they also get it. When we talk about what is temporary, what is permanent, I really appreciate my friends talking about the deficit. Of course, they don't include the fact that many of these tax provisions are only temporary, such as the major tax relief for individuals. That's temporary in nature. The business tax is permanent. And I hear my Republican friends saying, well, we'll just extend that. Well, you extend it, the deficit's even larger than the $1.5 trillion. But why are the individuals, why are the middle-income families that get some of the benefits of this bill, when you add it all up, they lose, but you get the benefits they get are temporary. Business tax relief, permanent. This bill is an assault on middle-income families. And when you take a look at the deficit, how we're going to have to pay off that deficit, and who's going to pay off that deficit, it's going to be middle-income families are going to be left holding the bill. We know that. And that's why this bill is not popular. That's why we know that it is not good for middle-income families, and it's not good for our economy. But we even go further than that in this bill. They even go further. It's been pointed out in the Senate, they added the provision that's now in the conference report that takes out an essential part of the Affordable Care Act on individual responsibility that would ultimately leave about 13 million Americans without health insurance. Now, Mr. President, why was this done? It's done for two reasons. First, the Republicans have been trying to repeal the Affordable Care Act, and these are 13 million people who have benefits today are going to lose it. But the second thing is, you can use those savings, and they're not real savings. We're talking about less money being used to help people get health insurance. Use that to provide additional tax cuts for wealthy Americans and corporations. So you're knocking 13 million people out of health insurance using that money in order to extend these tax breaks for higher income and businesses. That's unconscionable. What's going to come next? Well, you're not even subtle about this. We now are going to say, well, the deficits are bigger than we expected. I hear, again, my friends on the Republican side, they're deficit hawks. Well, you're not deficit hawks when you deficit finance a tax cut. That's not helping this country. So what comes next? Well, we're going to have to cut Medicaid and Medicare. Who suffers when you cut Medicaid and Medicare? It's going to be middle-income families again. And then we're going to have to take a look at the federal budget. I've heard some of my colleagues already talk about this. I see plans right now that we're going to take it out on the federal workforce. The federal workforce, which has already contributed about $182 billion to the deficit through getting pay adjustments that are below the cost of living, having freezes, going through continuing resolutions and sequestration and government shutdowns, asked to do more with less. So we are talking about critical services to the American people, whether it's the research that's done at the National Institutes of Health, whether it's food safety, whether it's veteran services, whether we're talking about dealing with the opioid crisis in America. All that is at jeopardy, and we know that. We know they're coming back with cuts in these programs because we now have a bigger deficit as a result of giving corporations these big tax cuts, not all businesses, just the biggest businesses, and giving the high-income people this tax relief. That's why the American people do not like this bill. And we talked about creating jobs. I hear my friend again talk about creating 1 million jobs under this tax bill, spending $1.5 trillion and creating 1 million jobs. Well, we had bipartisan legislation in the last Congress that took a couple $100 billion of one-time only revenues and said the responsible thing would be to use that for infrastructure, to seed infrastructure. And if we could get that up to about $300 billion, we created 4 million jobs. 4 million jobs for $300 billion. Here you've got 1 million jobs by your own number, spending $1.5 trillion. It's a terrible investment for the American people. We can do better. But this bill is also an attack on our states. It's an attack on Marylanders. It's an attack on the state of Maryland. Marylanders will come out much worse under this bill. And there are many reasons for it. But one of the major reasons is that the bill eliminates the deduction for state and local taxes. And I'm going to talk a moment about that, because I did serve in the state legislature, as did many of the members of this body. And I believe that we should respect state and local government. It's the same taxpayer that pays local taxes, pays state taxes, pays federal taxes. Ever since we adopted a federal income tax, we've always, one of the only provisions that's remained intact throughout the entire history of the income tax is to say we're not going to tax on tax. We're not going to impose taxes on state and local taxes. And that, of course, was one of the reasons why a constitutional amendment was changed to allow income taxes, and now we're breaking that commitment on federalism. We're really breaking the constitutional spirit to tell our state and local governments that we're going to impose taxes on taxes and make it more difficult for you to raise the revenue you need in order to finance state and local services. So in Maryland, about 45% of Marylanders use the state and local tax deduction. We happen to rank #1 in the nation on the number of taxpayers that use state and local tax deductions on their federal income tax returns. And the average amount, this is the average amount in Maryland on deductions for state and local taxes, is $12,900. That's the average. So the average taxpayer in Maryland is going to pay more taxes as a result of the $10,000 limit that's imposed in this bill. But it even gets worse for Marylanders. And this is going to be typical, I think, in a lot of states around the nation. Maryland has an itemized deduction and has standard deductions on their income taxes, as many states do. But I think Marylanders are going to be surprised to find out that they may not qualify for itemizing their deductions at the federal level, because as a result of the changes that have been made here, only about 5% of the people in this country will still use the itemized deduction. So you go and do your federal taxes, then go to your state expecting you'll be able to deduct the state these items, only to find if you haven't deducted at the federal level, you can't deduct at the state level, because we harmonize in our enforcement with the federal government. We didn't think about that when you put this provision in the bill. I heard my friend say we had hearings. We didn't have hearings on that provision. We've never had a hearing on that provision. We've never brought state people into our committee and say, what happens if we raise the standard deduction? What impact does it have on the states? What impact on the states if we eliminate state and local tax deductions? We haven't had those discussions. And quite frankly, it's going to be more challenging for our states and local governments to meet their needs. And they have the primary function for educating our children and keeping our communities safe. That's a primary function of local government. Sanitation and dealing with public health is going to be much more challenging for our state and local governments to be able to do their finance. And did we consider that when we took up this bill? The answer is no. There are so many consequences to this bill that have not really been thought out. Let me just give you a few. There's a reason why people who are concerned about the real estate industry are concerned about this bill. The limitations we put on the deductions of property taxes, the limitations that have been increased on the amount of interest you can deduct on mortgages will all have an impact on property values. Properties that Americans own will be less valuable with the passage of this bill because they will not be able to get the same tax advantages as they had prior to it. Have we thought about that impact? Have we thought about what that does to wealth of middle-income families? Have we thought about what impact that has on assessed evaluations, on local governments that depend upon property taxes? Been no consideration of that. I met this week, Mr. President, with leaders in our nonprofit community in Baltimore. We went over some of the issues they deal with in providing help to our community. And several were faith-based type charitable groups. And I went over what impact it's going to have with the restrictions on the number of people who are now going to be using itemized deductions. One of the charitable groups I met with, which is one of the faith-based groups, told me that the overwhelming majority of their givers are in middle income. And today, they are able to take a deduction because they use itemized deductions. Under this bill, most of those families are going to fall within the standard deduction and they will no longer be itemizing their deductions on their federal tax returns. Now, they don't know what impact that's going to have, but when their givers find out that there's no tax advantage to that gift, you know it's going to have an impact. We know that. Charitable giving is going to be down. And I hear my colleagues talk about frequently that a lot of what we do to help people, we rely upon the private sector. We rely upon the charitable groups. Do we have the courtesy to bring them into a hearing to understand the impact this is going to have? No. It's going to have a negative impact on our nonprofit charitable groups. And that is another consequence of this legislation that we don't have the full impact or understand. Let me talk just a minute about this 20% deduction on pass-through income. Just so that the people of this country understand, this is a rather complicated provision that was added to the bill. It provides for the providing additional tax relief for businesses that do not use the C tax rate. These are our partnerships, our S corporations, our limited partnerships, our sole proprietors. And understand what we're trying to do here, because we've cut the corporate rate so low, down to 21% from 35%, we recognize that other businesses now are going to be at a disadvantage, and that's true. So we're trying to figure out some way to give them tax relief. Now, I've heard my colleagues talk about simplifying the tax code. This provision does anything but simplify the tax code. It has what's known as guardrails as to how we calculate how much you can take up to the 20% of the distribution as a non-taxable event. And that guardrails affect the type of business that you're doing, it affects the amount of assets that you have, it affects the amount of salaries that you give, the labor that's done within it, whether it's actually services or performed by the partnership or not. My goodness, it's a minefield for accountants and tax lawyers to now develop shelters. Mr. President, I'm old enough to remember the 1986 tax debates here in the United States Congress. I was not part of the Congress. I was in the state legislature at the time. And I remember the effort to get rid of shelters, because shelters are an inefficient way that you set up business structures in order to minimize taxes. Well, this pass-through provision is going to be used as shelters. There's no question about it. And we have had no hearings at all as to how we're going to deal with that problem. And then I heard a lot of my colleagues on the Republican side talk about how this is going to bring all these jobs back home. Now, let's make this clear. Make this clear. What this bill does is move towards a territorial tax system. What does that mean? That means companies today that outsource some of their work to another country will be able to only pay that country's tax rate rather than the U.S. tax rate. Now, that means that they'll be able to pay, in some cases, less taxes, but what they can now do, because we are harmonizing toward territorial tax, is that we are rewarding some companies to outsource. Do we understand what the lower tax rates for corporations, what the net impact will be on jobs in America? All we hear is, oh, we're going to create new job opportunities because we have lower rates for businesses. But we don't tell the American people that you can keep those jobs overseas and pay a lower tax rate. So let's be honest about that. And why didn't we have a hearing on that part? The consequences are far from understood. And then I heard several of my colleagues talk on the floor of the Senate about preserving credits, that we preserved this credit, or we didn't take, like you're getting credit for leaving something in the tax code. Well, let me say something. Credits are important. In the city of Baltimore, we've used low-income housing tax credits and historic tax credits and new market tax credits to generate a lot of economic activity. It's very difficult to put together a major economic program within our urban centers. Now, I could point to West Baltimore and how we've used all those tools for urban redevelopment. I can point to our arts district and how that's been used. But I know this. Credits are not going to be worth as much under this bill as they were before, because we've changed the value of a tax credit. What impact is that going to have? I don't know. The problem is none of us know. But it's going to have a consequence, and it's going to affect economic growth, and it's not going to be positive. And we haven't taken steps to try to counter that. And then I noticed that there are some changes in the renewable energy sector. I don't fully understand all the changes, but I do know those that are involved in wind and solar believe that what we've done has made it more difficult for them to get investors. And it sort of looks like perhaps this was an effort to help the fossil fuel industry. And when you look at the UNWRA provision, which opens up the pristine areas of the Arctic to drilling in Alaska, you know that this bill is tilted towards fossil fuels rather than having a level playing field for America's energy. I worry, is this the first step to mid-Atlantic drilling off the Atlantic coast, off of Maryland, and the impact it could have on the Chesapeake Bay? Mr. President, I must confide that I've been in conversations with some of my colleagues on both sides of the aisle, asking whether we will cooperate on a corrections bill. I find that amazing. We haven't passed this bill yet, and we're talking about the process to correct the mistakes that are clearly in this bill. That's not the way we should be legislating. We know that we're going to have to revisit the pass-through provisions because we know they're not drafted right. We know the tax credits are going to need additional time. We know that the energy provisions are going to have to be revised. We know we've done damage to middle-income families that they're going to demand that we correct. Why don't we get it right the first time? Why do we have to look at passing a bill that we know is badly flawed? The last point I want to make is that there's been a commitment that when we take up a tax bill, don't we want to simplify the tax code? Simplify it so Americans understand it better and feel more comfortable that everyone's being treated fairly. And secondly, the one argument I hear from almost all stakeholders is make the tax code predictable so we can plan. Give us the rules. Don't change the law all the time. Don't put temporary provisions in here, because Congress has a habit of missing extender dates. We've already missed extender dates in this Congress, and now we're talking about leaving town this week while we have provisions that are expired, such as the Children's Health Insurance Program. And what does this tax bill do? It's got numerous provisions that expire, some within a short period of time, adding uncertainty to our tax code and the planning of our tax code. This bill is anything but simplifying the tax code and certainly not providing the predictability. So, Mr. President, the American people get it. That's why they believe this bill should not be passed. It's an assault on middle-income families. It's dangerous to our national security by increasing our deficit. It will hurt millions of people who will lose their health coverage, and it should be defeated. With that, I yield the floor.